I would want to be in my own home, and I want to be able to afford quality care. If I want to hire somebody to come in and see about me, I don't want money to stand in between me and quality care.
You better come on here. The power of choice.
Yeah, and I love having choices. It's nothing like having the power to choose. And so the time is now for me to prepare for whatever life has in store. I just want to make sure that money isn't a barrier for me.
That's right.
So with that, I just wanted to be a really good steward. I wanted to make really smart decisions. I am single. I'm not married. It's me and Jesus. And so
now hold up. I'm sure some men probably heard that and was probably like, "What? Rewind, right?" What's up, everybody? It's your girl here, Breanna Colón. Thank you so much for joining me again for another podcast episode. Your life, your money. All right, we are excited today. Today, I have hanging out with me, Miss Ivory Roger. What's up, Ivory?
Hey. Hi, everybody.
First of all, can I talk about how we styling and profiling with these glasses? Okay. We are doing it. All right. We're doing something and we know we look good. We just know it. That's how you do it. Now, for those that are listening, I know that you can't see our glasses, but I'm sure you can feel the energy that we must look good since I'm saying that we look good. But for those watching on YouTube, I know y'all looking like, oh, yeah, where did she get those glasses? Where do you get yours?
Zulu.
Zulu. Oh, I've seen Zulu. Yeah. I got mine from Vooglam.
Okay.
Similar company, you know, same concept. They just have fabulous glasses that you get to, Anyway, all right, that's a whole nother story. But I know that some of the women that are watching will be like, oh, I like those glasses because I get compliments all the time, and I'm sure you do too.
They're cute and affordable.
That's right. Absolutely. Affordable. That's key word right there. Y'all know I'm all about the budget. It's got to be affordable.
And good quality. That's the most important thing.
Right. Yeah. Right. Very good quality. They're sturdy. Like they're just, they're really, really good quality. So, well, anyway, thank you for joining me today.
Happy to be here.
So, Ivory is a part of the Integrity Financial family, and we are just going to talk today a little bit about her journey and how things have been for her, how things are going now, a little bit of this and that and everything in between. So, I want to start with just talking about childhood, first of all.
Okay.
Did your parents teach you anything about money? What did you know about money growing up, or did you know anything?
I knew, that you had to work for what you got. You know, you had to earn what you got, but not any really financial literacy education.
Yeah.
Right.
Yeah.
I did learn that with whatever money that you take, that you always reserve something for yourself, but not any real financial literacy on, credit and how to approach credit beyond you need to have good credit. But what does that mean? How do you build good credit? How do you maintain good credit? So some of the intricacies of it, I learned just through trial and error, just through, experience. Right.
So you said, you learned that you needed to reserve some money. Did you do that though as a child?
No.
I didn't either.
No.
I think it's not a secret that culturally, at least for the African American culture, the financial literacy has been lacking, and especially for our generation. And some of it's not like it's because our parents don't want us to know, or they, don't want us to be doing well financially, but some of it is just because they don't know. Parents do the best that they know how to do with raising children. And so sometimes there are some things that gets missed.
That's
and
really
so,
what it is.
Yeah.
You spend so much time working and, you're trying to raise 3 kids. It's just so much going on that you're just caught in the rat race.
Right.
And so you're just focused on putting food on the table. Do my kids have everything that they need? Do they have some or even most of what they want?
Yeah.
And so some of those things kind of get lost in the sauce because you're so busy providing.
Absolutely. So you said credit. What was some of your hard lessons you learned the hard way, I guess, about credit?
Well, the main thing that I learned the hard way is that when you're in college, they give you credit cards.
Girl.
It's not hard. I just remember it was a Chase card that I had, and there were multiple banks that would literally set up tables right in front of the bookstore.
Sound like you was at my college.
Right in front of the bookstore. And one of the first hard lessons I learned, because I'll never forget, my minimum payment was $10. And I used to pay that.
You was like, oh, that's it?
I was in college.
Right.
So
You're
I
like,
really didn't have
shoes.
much more than that.
Yeah.
But I erroneously saw this credit card almost like it's free money.
Right.
Not that it's money that I'm having to pay back. I wasn't considering how high the interest rate was on those credit cards. But did you even
understand interest rate, though, at that time?
No. You know? Not enough to even be appalled that my APR was over 20%.
Right.
You know. And I'm paying this minimum payment of $10, which means it'll be like, you know, taking forever to pay this debt back. And I made a mistake of, now I know to use my credit card like I would a debit card. That's how I approach using my credit card. Back then, I was using it to finance my lifestyle. So if I needed something to eat, like I was using my credit card to go to McDonald's, to go to the Chinese store, to do whatever I was eating.
Me too.
And I'm paying this $10 every month.
No, I feel you on that. I think I talked about this in a previous episode about how in college I had not 1, not 3, not 5, but 7 credit cards. And, you know, I thought I had it going on. You couldn't tell me nothing. You know, I'm buying my now husband, buying him stuff. And, you know, I'm thinking I'm doing something and paying the minimum payments. And my parents did not know that I had all these credit cards because I was a musician. I was making my money and I was paying my own bills. Or so I thought.
Oh, well, you were buying your boyfriend gifts. I was setting out my family and friends. Christmas time? Oh, I got you. It's a Merry Christmas.
For everybody. Here you go.
You are in college.
And you get a gift and you get a gift.
And my Aunt Marcia told me, I'm not even going to say the word she used, but basically she was like, just give them love. But she said it in a much more colorful way. She was like, just give them love. You don't give out gifts during Christmas time while you're in college. You just give people love. That's what you give. That's what you have to give.
Right.
But I was setting it out.
But you thought you had it going on. You're like, shoot, I'm about to hook them
up.
My
brothers are 6 and 9 years younger than me. I'll buy your school clothes. Because I didn't mention I had a Dillard's card too.
Oh, okay. Oh, yeah. You had to pay some real money card. Wow. She said, you hooking up the brothers too? Wow.
Yep.
Wow. So how many credit cards did you end up having at that time?
So I had 3 because I had a Chase Visa, I had a Dillard's card, and then I had an Express card.
Okay. I remember Express.
That?
Yep.
Those were the 3 that I had.
I think I had an Express card too, now that I think about it.
Yep.
That was the store at the time. I was definitely buying a lot of stuff for myself. You know, like I said, I thought I had it going on until reality check set in.
Yeah.
When my husband almost didn't marry me because of the amount of debt that I had. When we started talking about marriage and, you know, we're looking at how does it look if we put the finances together, and he had almost no debt, and here I am with all these credit cards. He was like,
right.
I don't know about this, you know. So ultimately, he obviously still married me. Praise the Lord. And and little did he know, or me for that matter, that I would be doing what I'm doing now, educating other people on how to be financially free. Like, wow, look at that come full circle here. Of, you know, being just a hot mess.
And good for him that he was a wise man.
Amen. You hear that, husband? She said you were a wise man. Hallelujah. So as an adult, how has your relationship been with money over the years prior to us meeting? Like, how was things, do you feel your financial life was going?
I felt like I was doing what I was supposed to do. And what I was supposed to do was make sure that my bills were paid on time. And I was doing that.
Okay.
So when that bill is due on the 15th of every month, it was paid by the 15th of every month.
Well, you're saying a lot just right there, for real, because there's some people that, you know, well, I got a grace period. I got, you know, some people just struggle even in that area of just paying bills on time. Now, I mean, what you're saying is what's supposed to be normal. But
yeah, but I had to get to the point before that, because I do remember there was a period of time. Well, first of all, I'm an educator. And I was working in education for 18 years before I got to the point of making 6 figures. So I was used to, from, you know, when I was working as a classroom teacher, I was used to having side hustles. Like I was used to teaching summer school. When I moved up here, I was used to mentoring national board candidates. I was used to teaching a course. Like I always had a hustle.
Yeah.
to be able to make ends meet. But I do remember back when I was working as a classroom teacher, of course, I was making the least amount of money out of my career. And so when I would get paid every 2 weeks, sometimes I would just let my money sit for a minute because I used to be in the habit, of course, of like paying my bills as soon as the check hit. And it was depressing to see all my money leave.
Yeah. Yeah.
And I was just, I'm like, God, I work just to pay bills. Like once I pay my bills, I have this little bit to kind of play with. And so I did get to a point where I was like, you know what? I'm not going to pay my bills on Friday when it posts. Maybe I'll wait next week after that. The problem with that, and it was just an emotional, like mental, not emotional, more mental. I just wanted to see that I had a certain amount in my account before it just started leaving me. But the problem that happened as a result of that, although I may not be like 30 days late for something, I'm late for it.
Right.
So now I have a late fee on top of. So once I got tired of paying late fees, I got back to just as soon as, just making sure everything is on time.
Right.
But the issue for me was just feeling like once I get my money and my money hits the bank and I pay everything that I'm supposed to pay and do all the things that I'm supposed to do, what's left for me?
Right. Right. That right there. And I wrote down what I wanted to go back to a point you made about working just to pay bills. There are so many people, when you think about how much debt do you have right now, and you get into this cycle of, as long as I pay, this bill, this bill, this bill, like you said, I'm handling my responsibilities. Is that all you want to work for? Is that the only reason you want to work, just so that you can pay bills? What else do you want to be able to do in life? And if your answer is no, I don't want to work to just pay bills, at what point are you going to do something different so that you have a choice to do something different? If you want to be able to travel more, you want to be able to just go hang out with your friends more or do more for your family or whatever the case may be. At what point in time are you going to say enough is enough? I need to do something different if I want to have a different result. When is that going to be? You have to get to that place. And obviously that had to happen for you. Obviously we wouldn't be sitting here right now.
I feel like I was and I think this is a blessing for me. A part of me feels like I was almost forced into it. When I moved to Maryland, I was born and raised in Florida. And then I went to college in South Carolina. Both Florida and South Carolina, the living, the cost of living, well, Florida now is off the chain, but
right.
back all those years ago, it was an affordable living, no state taxes. South Carolina was a very affordable place to live.
Sure.
But once I moved here, I'm moving further away from home. So I live in a place where I'm not from. So naturally, I'm going to want to travel to see my family. I'm going to want to travel to see my friends. And then I want to do some recreational vacation traveling just to different little places. So when I moved here in Maryland, of course, the cost of living is far more expensive than where I was coming from.
Right.
And when I first moved here, I moved in with my sister and my brother-in-law. They were living in Bowie at the time. So I wanted to live in that area. When it was time for me to start looking, I could not afford any of those places in Bowie without having a roommate. I didn't have a roommate. So I ended up moving in Waldorf, and it was the best decision I could have made because I didn't want to be house poor. I live far away from my family. It's important that I'm able to travel and live beyond just paying my bills. So I ended up moving to Waldorf, and I ended up purchasing a home that I could grow with. So you know how usually every year your property taxes go up. That's not like unusual.
Right.
And so usually when that happens, unless you're paying the difference like right out of your pocket, then your mortgage goes up. And so I got a home whose mortgage I could grow with. So as the property taxes went up, I already had a house that I was living below my means. I wasn't like, so when the bank told me how much of a house I qualified for, I got a house that was significantly cheaper than that. That was the best decision I could have made because I was already not necessarily making a 6-figure salary or a very high salary. And so the money that I made from my job was taking care of my bills. And I still had money left over. But it was the mentoring and the teaching a class, that was my play money. That was my travel money. That was do what I want to do money. I wouldn't have even been able to do that had I stayed in Mitchellville or Bowie or an area that was more costly. that extra money that I was making wouldn't have been able to play with it. That would have been contributing to my bills. So that was a big, I believe that me making that decision to, and of course, Waldorf was further away, but the cost of living was so much more affordable.
Yeah.
And that really, I put myself in a position to be successful when I did that.
I know that's right.
Yeah.
Come on here. Position to be successful. You dropping some good nuggets here that I'm writing stuff down. I'm like, wait a minute. This is good. This is good. Position to be successful. And that's the key right there. You want to position yourself to be successful. And another thing that you mentioned earlier is about being house poor. I mean, the fact that you thought wise enough to say, I don't have to do what everybody else is doing and live as the Joneses, if you would. And not to say you didn't have a nice house, but I'm saying in terms of just trying to be wise and think about, okay, I want to be able to do other stuff. So let me think about, this is a long-term investment. And I think that is often missed with people when they're deciding that they're going to buy a home. Oh, well, this house, especially if the lender qualifies you for 350, 450, whatever. And then if the realtor finds that out and the minute they start showing you the houses at 400, 500, it's hard for people to say no to that, even though they probably should. Maybe they need to get the 350 house, but because they've seen the 450 house, they're like, oh, yeah, oh, gosh, I like the window over here. And I like all the light. And, you get sucked in.
And I do want to take this opportunity to shout out my realtor at the time. I was working with Freddie Brown at the time.
Okay.
When I, moved here and was looking for my first home. And it was Freddie who was really encouraging me to shop for something that was lower than what the bank approved me for.
Go ahead, Freddie.
When I got the approval letter, I was like, okay, so we're looking for this. And so she broke it down and just gave me things to think about. And I really appreciated that because she didn't try to tell me what to do.
Right.
But she was like, have you considered such and such and such and such? Have you thought about blah, blah, blah? Because you don't want to be house poor. That was the first time I'd even heard that phrase. So I want to shout Freddie Brown out. She's my soror too. But I want to shout her out because she really did me a solid, because she could have easily just been thinking about, okay, the more money she spends on a home, the bigger my commission is going to be.
Exactly.
Right?
Exactly. Now, what company is she with?
Now, I don't know who she's with now. And that was so many years ago. I can't remember who she was with then, to be honest.
How you gonna give her a half a shout?
I know. But if anybody knows Freddie Brown, her husband is also in real estate too.
Okay. All right.
Yeah, but
okay, well, there you go. Shout out to Freddie Brown. So, and that's good because that's a good point when it comes to realtors and picking a good realtor. I think it is absolutely, from an advisory standpoint, advisable for you to meet with more than one realtor. If you've never met with a realtor before, how do you know what a good realtor is? You don't. Even if that person was referred to you, have a conversation, see how they make you feel. See if they're willing to answer all of your questions because you're a first-time home buyer. See if they're willing to take the time with you no matter how many times you call them, or are they treating you like you're just another number? Are they sending you 50 homes for you to look at, or are they getting an understanding of what type of house you actually want and looking for that house for you and sending you homes that fit what you're looking for, 2 or 3 homes, not 50.
That's right.
That kind of thing. So but for you to understand the full job and scope of a realtor, you need to talk to more than one so you can really get an understanding. Ultimately, maybe you'll end up with the first one that you talk to, but at least have a conversation with number 2 and number 3. And to do the same thing when it comes to lending, for your mortgage lender. Don't go with just the first mortgage person. What if the second person had a better rate that they could offer you? Or maybe they have a better program, or maybe they know about a grant that you could get to buy the house. So these are things that we need to not be lazy when it comes to making long-term investments. These are major life decisions that you're saying, I'm going to sign on the dotted line for a 30-year mortgage, a 10-year, 20-year, however many years it is. It's still a long time. And so you do have to consider, I need to make sure I have all the right people in my corner so I have the best possible outcome for this particular transaction. So going back to this house poor thing, though, because a lot of people, especially, I hate to say it, but while Prince George's County is one of the richest Black counties, in America. It is the richest Black county in America.
Oh, Charles County is now.
Oh, Charles County is now? Really?
Where I live. Thank you.
Oh, I guess I better step it up on my statistics, okay? As of the last time I had checked, which apparently was not recently. Thank you. I stand corrected. Charles County is the richest Black county in America now, but I'm sure Prince George's is probably a close second or very close.
Yes.
But but what's sad about it though is previously, I haven't looked recently as far as recent stats, but I know previously some of the largest foreclosure rates were coming from Prince George's County, which speaks volumes to our level of financial understanding when it comes to buying a house. I was so impressed when we first moved to Maryland and we were driving around to different neighborhoods just trying to get ideas about where we want to live, and we would drive through these neighborhoods and it would be like all Black neighborhoods and like really nice big houses, and I'm seeing all these people outside with Mercedes and BMWs and all and I was just like, wow, look at us. We are killing it out here. We are doing so good, but then over the years after living here a long time and really getting an understanding and having worked in the mortgage industry because I was a loan officer for 10 years. So having been behind the scenes with that and seeing how we as African Americans handle our money, our credit, what does our credit look like compared to our Caucasian sisters and brothers and other ethnicities? It's in a lot of cases, it's a night and day difference. Now, I'm not saying that all Black people got bad credit or anything like that. That's not what I'm saying. But I am saying too many of us do. I am saying that too many of us have. There's so many middle class income earners in this area that are living like they're 3-figure earners, 5-figure earners. You know what I mean? They're not living within their means. And part of that is being house poor. So I want to make sure I don't gloss past this, that I take the time to speak on it because it is important that a good rule of thumb, the lender is going to tell you that your mortgage, your housing payment, and when they say housing, they're talking about your HOA, your condo fee, the mortgage, everything included, should be generally in the 35% range. Sometimes they'll extend to 40, but generally somewhere in that 35% of your gross. They're looking at your gross. You don't live on your gross. Right. So that's already setting you up to fail. But you've got to be smart enough to know that, okay, that's great that they approved me for $500,000, but let me look at my numbers and see what am I actually living on and what percentage of my money do I want going out to my house. For some people, they got like a whole check. Oh, I've heard people even say this before. Oh, yeah, my first check takes care of the mortgage. Are you listening to yourself? Right. You're saying that half of what you bring home is going to the house. No wonder everything is tight. Yeah. That means that you still, after you pay half the money to the house, you still got the other half that's going to debts and utilities and childcare and car loans and student loans and everything else. No wonder there's no money left for you. Right. Like this is just not okay. But so many people are in that boat. So I hope that you are hearing me when I say that you need to keep your housing payment within 30% of what you take home if you want to be able to do other things in life. Right. Without working yourself into the ground, without having to, maintain 2, 3, 4 jobs. Right. Right. And another issue is married couples, because married couples a lot of times will qualify based on both incomes. Don't do that. Why is she saying don't do that? Because if, God forbid, one of you loses your job, you're going to immediately be struggling because you qualify for this big, huge house on 2 incomes. So that's great that you have 2 incomes, but be financially free on 2 incomes. How about that? You can still have both people on the title. Both of you can still own the home, even though, one person's name is on the loan. Like that's still fine. And if that's a problem, then that means you got bigger problems. Then that means there's trust issues. Right. If it's like, oh, no, he got to be on the mortgage too, or she got to be on the mortgage too. Like, why? Those are important things to address. So anyway, I hope you hear me. 30% is the max that you should be looking at when you're trying to figure out. And if you already own a home, you need to sit down on paper and figure out, all right, how much do we bring in and what's our total income for the month? And how much is the mortgage payment? And you just take the mortgage payment divided by the amount of take-home pay to figure out what is the percent. How much is your mortgage taking of your total pay? You need to know that number because that might be eye-opening for you. No wonder I'm struggling. I got 45% of my money going to the mortgage. Like, oh my goodness. All right, I'm getting off this soapbox. We're going to move on. I had to go ahead and hit a sermon right there, you know? All right, I'm ready to take up an offering. All right, so the other thing that you mentioned was that you said your main check took care of the house and all the regular bills, and you still had some money left over. Is how you positioned yourself so that your extra check was your play money, meaning that your money had an assignment. And I absolutely love that you brought that up because that is the thing that people need to also understand is that your money needs to have an assignment. First of all, it's God's money. Let's start right there. It's not even your money. It's not our money. It's really God's money. Let's start there. But we are supposed to be good managers or be good stewards over it. And so if that is the case, every dollar that comes in should have an assignment. It can't have an assignment if you're not writing it down to see what to assign. Right. You can't just be willy-nilly and expect to be highly successful. All of that is really, really important. So, so the fact that you positioned yourself that way is absolutely fantastic because a lot of people get part-time jobs and they don't, they will sometimes qualify for their house using the part-time job. Now you just became a slave to the part-time job, Now you're required to keep doing it and you don't have a choice. But for you, it's optional. If I just feel like having some extra play money, then cool. But if I don't have to. Right. Who would want to sign up for that for 30 years? That's a life sentence. Absolutely. About like student loans. Sometimes people feel like student loans are a life sentence. But me and Ivory are here to tell you today that student loans, houses, cars, none of that has to be or feel like a life sentence. You can have something different. You can have it be paid off whenever you want to with the right plan. Hello. Yep. Oh my goodness. Anyway, we're going to take a quick break. Okay. Because I'm talking a lot and I need some water. We'll be right back. And we're back. If you're just tuning in, you will absolutely want to make sure you go back to the beginning of this episode because it is some good conversation happening up in here. Okay, I am hanging with Miss Ivory today. She's a part of the Integrity Financial family and she is doing some really good things and we wanted her to just come and share a little bit about her life and how things have been, how things are going and everything in between. And so we were talking about living within your means and not being house poor and things of that nature. And you were talking about how you had positioned yourself when you moved to Waldorf, and we used to live in Waldorf too, White Plains, but okay, still technically Waldorf. Right. And so you were already doing pretty good. You got your extra job, that's your play money and all of that stuff. What prompted you to reach out to us?
So back in 2018, I had gotten a job promotion. I was blessed with a job promotion. And that was the very first time in my educational career that I had started making six figures.
Come on, six figures.
And so
no glossing over that. I hear applause in the background. That's good. That's good. Go ahead, girl.
The interesting part about that is when I got the job promotion, I went from being the job that I had before that was in the teachers union. So I was able to do the, mentoring national board candidates, teaching a CPD course and all those different things. But once I got the job promotion, I went from the teachers union to the administrators union. So that meant those other part-time jobs I had, I could no longer do them because those are reserved for people in the teachers union. Right. And so now I was finally making enough money with one job to take care of everything I needed. I honestly didn't need the part-time work, right?
Yeah.
So with that, I just wanted to be a really good steward. I wanted to make really smart decisions. I am single. I'm not married. It's me and Jesus. And so
now hold up. I'm sure some men probably heard that and was probably like, what? Rewind right there. She said she what? She loves Jesus. She's single. She making six figures. What? Shoot. What's her number? Okay. Sorry, go ahead.
So I was talking just to some coworkers about just, wanting to, meet with a financial planner because I've never had one before. And one of my colleagues recommended you. He said that you had done some great work with him and his wife, that his wife wanted to retire. And based on the plan that you had put them on and the work that you had done with them, his wife was able to successfully retire. And so now and his wife is still young.
I was about to say early. Yeah, early.
She
That's
was
the key
still
factor.
young.
Early.
And so now they were working on, his debt. And so he was like, you will absolutely love her. She'll change your life. And he did not lie. So that was what made me want to, meet with a financial planner, because for the first time I was making six figures. And I knew that at that time, I had a lifestyle that was significantly below the money I was making.
Okay.
Because I bought a new home 10 years ago. And at the time, when I qualified for that home, I was making $68,000 a year when I qualified for that home. So now I'm making significantly more than that.
Yeah.
So how do I, with this new influx of money that I have, not just spend it away?
Right.
How do I be, responsible? And then at that point, I'm thinking about retirement, because I had not been aggressively preparing for retirement up until that point.
Yeah.
So I knew, because I was really behind the power curve with, preparing for retirement and setting up my life for after work.
Yeah.
I was already behind the power curve. So I needed someone to come in and educate me really on how I need to make some financial decisions so that I can best position myself.
Gotcha.
To be financially sound.
Financially sound. You use some good words today, honey. Some good words. I'm about to have her back as a sidekick. So, all right. So you, at the time when let's see, this was 2019 when we started working with you. And at that time, you told me that your goal was to retire by 60. And I think you were what, 48, 7, somewhere, apparently my math ain't mathing today. But 46. You were 46 at the time when we met, and your goal was to retire by 60. So we were working with the 14-year window to say, all right, let's see where you are. Let's look at what how much you're going to need to live off of. Which brings up another point. A lot of times people know that they want to retire, but they don't know how to properly plan for retirement. And part of that is knowing your numbers. And it's more than just, well, let me see how much they're going to pay me if I retire at 60. It's way more than that, because you need to really understand, first of all, what do you want retirement to look like? What do you want to be doing? Do you want to still live in the same area? Do you want to still live in the same house? Do you want to buy a vacation home? Like, it's so many things that people need to think about. What do I want? Because you have the ability to create the life that you want. And especially when you have a 14-year window, you can absolutely live life on your own terms, by that point. And so in working with you, when you came in, you had you had six debts, which included the mortgage. And at that time, you also had, actually, no, it was 8, because you also had the 403B loans. So let me talk about that for a minute, because that's another, I almost feel like it's an epidemic of people wanting to borrow from their retirement account all the time. So for you, at the time that you borrowed from yours, like, what was your story on how you ended up needing to borrow from it?
So the mistake that I made was I had a plan. I had a car, prior to purchasing my new home. I had a car and I had it for 12 years. So, I had more than paid that car off. I had, had paid that debt off for at least 5 years or more. And my plan when I paid my car off was to continue to pay my savings account, my car note money. I wanted to pretend like that car note, that I still had the debt.
Yeah.
Well, I started off real good, paying my savings account back.
Yeah.
But lo and behold, life would happen. Something will come up. You need new tires. You need new whatever. And so I eventually really just got away from it. Like, I wasn't saving that car note religiously once a month.
Yeah.
Then I got around to wanting to purchase a new home. And when you sit down and really look at all of your financials and you really see that bottom line, like, this is the amount that you're going to have to come to the table with in order to purchase this home. I kicked myself because if I would have been diligent with saving my car note money, I would have had that money in disposable income.
Right.
But I didn't have that money in disposable income. So the only other place I knew I could go get it was my 403B. But then when I pay that money back, when I'm paying myself back, I'm paying it back with interest.
Yeah.
And so that's how I ended up borrowing against my 403B, because I needed that disposable income to get inside my house.
Gotcha. Yeah. And that's a lot of people's story, unfortunately, that they, didn't position well as they should have, and end up needing to borrow from their TSP, borrowing from their 403B, their 401k, wherever they can borrow from. And I even heard someone recently tell me that when I said, "What do you have in savings?" they immediately referenced their retirement account as their savings account. Oh, well, I have this amount in savings. And I said, oh, I thought you said that was your retirement account. Oh, yeah, that's my savings. No, it's not. I can't enforce that enough about the fact that your TSP, your 401k, your 403B is not your emergency fund. We all know that at some point in time, we might want to buy a house. We might want to have kids. We might want to get married. We might want to have vacation. These are all known things. And so we have the ability, with the right level of discipline and a plan, to set aside for emergencies, or set aside for travel, or set aside for whatever it is that comes up. So many of us end up borrowing, and it's taking away. They figure, oh well, I got 100,000 in my TSP, so it's not a big deal if I take out 14. But it is, if we start looking at what is the impact to you long term in retirement. But it's also about your mindset, because that's giving you permission to create another debt. And though it's coming out per pay and all of that, that's nice. You're still paying interest, like you said. You know what I mean? You're still gonna be paying interest on that bill. So anyway, that's a no. Okay. Let's stop doing that. Let's make a commitment. Yes, I am saying to those who have loans outstanding in their retirement account, let's make a commitment today that this is the last time that you are going to do that, and you're committing to doing something different starting today. Okay? If you made that commitment, I want you to put in the comments. You can even send me an email if you like, but put in the comments that, hey, I committed today to stop borrowing from my retirement account and start saving into an emergency fund. All right. I hear some applause in the background. Yes. That's just, I'm clapping for you in advance. All right.
You'll be so proud of yourself. That one of the motivating factors for me is being able to see my account grow. Just over the months, being able to see that account grow. It's a sense of accomplishment. In the meantime, being able to, every time I log on to my mortgage account, every time I log on to my car note account, get notifications from Credit Karma. Hey, in the last 6 months, this is how much you've decreased your debt by. Like, it's
exciting.
It is. It motivates me. It helps me to feel like I'm accomplished. It helps me to feel like I'm doing what I said that I would do.
And most importantly, your word to yourself.
Right. I was just about to say that. It makes me feel like I'm pouring into me. And that's a good feeling.
Yeah.
That's a really good feeling.
No, that's beautiful. Pouring into me. Can you pour into yourself? Hey man, somebody pour into yourself. That's a word right there. Pour into yourself. Woo, child. The nuggets coming out of today. Anyway, so you had the 403B loans, and you had 6 other debts at the time that we met, and we started strategizing because we wanted to make sure that goal of 60 was achievable. And so now you are 51.
Yes.
She doesn't look it. But she is 51 years old, because we can be proud of our age, because what? Black don't crack. Yes. So anyway, she's doing some really good stuff. Got some really good stuff going on now. So with the plans, I would say, that we put in place, since from 2019 to now you're down to 2 debts, which is just the mortgage and a car loan. That already deserves an applause. I hear it in the background. Woo! Yep. That's all right. And so with the there's no more 403B loans, no more credit card debt, no more student.
Oh my God.
See, that right there. That okay. Anyway,
because I'm gonna tell you something. The thing that made me just I was happy for it to be paid off, but it angered me at the same time, because when I really looked at how much I owed over the life of my loan versus how long it took me to pay it off. Because I was like, if I really look at this amount the way that I would look at the price of a car, because that's pretty much what it was. It was like the price of a car. You don't take almost, you know what I mean? Like, you finance your car for what, up to 7 years at the most?
Right.
But, you keep, getting degrees and, you keep adding to it. But still, when I really look at how much I owed all together versus how long it took to pay it off, I was just giving away money. And now my whole approach is so different. Now my approach is, it's not good enough for me just to have a good credit score. And I do. And I'm proud of that. All 3 of my credit scores are above 815. And I am very proud.
You go, girl.
Very, very proud of that.
Yes.
But it's not good enough for me to just say, oh, I have great credit. I can, qualify for whatever I want, get the best interest rate. I'm at a point now where I want to make my credit work for me. So I'm instantly thinking, if I have to finance something, I'm already strategizing about, how do I not pay you as much interest as you're charging?
That's right. I know that's right.
How do I pay this off sooner? How do I make extra payments? Now, if I finance something, I'm automatically making bi-weekly payments. I didn't used to do that. I would pay my bills. It's due on the 15th. You get it on the 15th. Now I know to pay my bills every 2 weeks, and I'm always sliding something extra towards that principle, because I want to get out of this debt as soon as humanly possible.
That's right.
So that I can move on to the next goal.
That's right. On to the next goal and on to the next goal. So with the plans that we put in place, she will actually be positioned for retirement at 59. So we're coming in a year early, and we might come in even earlier than that. You don't know what's going to happen between now and then, because we're still talking about 8 years from now, you know? And so, but check this out, guys. So her mortgage, this is the part that I'm just like overly ecstatic. You would think it's my situation, but no, I'm excited for her. So her mortgage, she has 24 years left on the mortgage. Make sure you hear that part first, okay? 24 years left on the mortgage. Guess when it's going to be paid off? 8 years from now, okay? 8 years, I give you applause. Oh my goodness, 8 years. That mortgage is going to be gone, all right? You heard me say she's going to be positioned for retirement. But not only will she be positioned for retirement, she's going to be living a financially free retirement. She's already free right now. But I'm saying she will not have any debt at all from a 24-year mortgage. I'm trying to tell y'all what is possible. I don't care that your mortgage is 30 years. That don't mean you got to take 30 years to pay it off. She bought a car, and the car, you said you financed it. How long did you say you financed it?
63 months.
63 months. But she has already mapped out a plan to pay it off in 3 years and 9 months. I didn't help her with that. She did that on her own. 3 years and 9 months. Even though it's a 63-month loan. Because what did she just say earlier? She's trying to figure out, how do I give them as little money as possible? I'm not trying to pay you much at all over the price of this car or this mortgage or whatever it is. But not only that, on top of that, she is, what we did was we set up the IUL for you. So just a little short snippet about that. The IUL stands for Indexed Universal Life Policy. That's a life insurance policy. There are different types of life insurance that do different things. Make sure you get educated first on different types of life policies. There is no one size fits all. I don't care what people tell you. There's no one size fits all when it comes to life insurance. Everybody can't get whole life. Everybody shouldn't do term. Everybody shouldn't do IUL. You know, the type of policy that you need is based on your particular situation. So in her particular case, though, the IUL was a great vehicle because it grows money based on stock market performance. So she's able to, yes, it is a life policy, and yes, she's going to have cost of insurance, but she's overfunding it. And so what we did is she started it with $300 a month, and she's going to pay that for about 3 or 4 years, and then she's going to increase it to $400. Well, what's going to happen is once she is done paying off this mortgage in 8 years, she's going to take all the money from, well, not all the money, correction. She's going to take a portion of the money that was going out towards debt. Now, let me pause right there to make sure you're still with me. If you were to add up all the monthly payments for all the bills that you pay that you owe somebody. I'm saying all of your credit card payments, all of your student loan payments, your car loan payments, your mortgage payments. A lot of times when people pay stuff off, they just start spending that money on something else, or they go into debt again. But for her, she's taking a portion of the money that totaled up to what she was paying out on debt, and she is applying that money, $2,000 a month of that is going into her IUL after the bills are paid off in 8 years. And once she does that, she's going to do that from age 58 until age 65. And by doing that, she'll still be financially free at that point. She won't have any debt, but she's just, rather than enjoying the whole amount of money that she was paying out on debt, she's still being disciplined and saying, I'm going to just invest a little bit more of that so that I can create an even better outcome for retirement. Yes. So by the time she gets to age 65, she will have created another income stream for herself from her IUL. Her projected income at 65 is another $28,000 a year from what she started, 4 years ago? Something like that. A little bit longer than that, something like that. But she started around 2 or 3 years ago. So let me just repeat, because I know I said a whole lot, and some of y'all gonna be like, okay, what? So let me repeat what's really happening for her. What's happening is, by the time she is 59 years old, she will not have a mortgage. She will not have any debt whatsoever, unless she just decided to go buy another fancy car. She will not have any debt, and she's going to take some of the money that she was paying on the debt and increase what's going into her IUL. Now, she'll still be able to retire just off of her regular pension and, retirement sources. She'll be able to live off of her retirement income starting at 59 if she wants to. And then she'll be retired with no debt, chilling, living off her money, doing life, living on her own terms. And then by the time she's 65, we're adding another couple of $1,000s projected per month to her income that she didn't even need. Okay. This is just money that she's just going to have to be willy-nilly with, like what, could you have thought that is where you would be at this point based on where you were just like 5 years ago, even,
No, but I needed to. So I want to stress this, especially for folks like me who are single and who, it's you and Jesus. You have yourself to kind of depend on. I just knew, and then I don't have children either. And I know that even if you have kids, it's not always a guarantee that they'll do right by you in your old age. But not having any kids definitely leaves me to say, okay, whatever I do to provide for myself is what I'm going to have.
Yeah.
And I don't have any kids. Of course, I have family, but I don't have any children, when I get older to take care of me. So it was important for me that I had enough money to be able to pay for quality care.
That's right.
Pay for the care that I want, pay for the care that I deserve. If I get sick, or maybe I'm not so sick that I need to be in a nursing home or something like that. But I would want to be in my own home, and I want to be able to afford quality care. If I want to hire somebody to come in and see about me, I don't want money to stand in between me and quality care.
You better come on here. The power of choice.
Yeah. And I love having choices. It's nothing like having the power to choose. And so the time is now for me to prepare for whatever life has in store. I just want to make sure that money isn't a barrier for me.
That's right. And you're not being a financial burden to others in your family, because now you might need a caregiver or whatever, and it's expensive. But you'll be completely financially free. You got your regular money to live off of, and you got this extra pot of money to live off of. Long-term care, that's what you're talking about. And that is a very important factor that we don't have time to talk about today. But something that everybody needs to think about, is if you get to where you can't take care of yourself, what type of care do you want to be able to receive? And will you be able to afford it? If your answer is, I don't know, then that means you got some financial planning you need to do, right? So again, these are just things that we know that at some point in time, we might need some help if we get sick. And, if we know that that's a possibility, then we owe it to ourselves to not be a financial burden on our kids or other family members, and be able to position ourselves well to take care of whatever needs to be taken care of. So anyway, thank you so much, Ivory, for hanging out with me today. This has been an absolute pleasure. We're going to have to follow up maybe in, another 5 or 6 years from now, have a follow-up episode so we can really talk about where you are at that point. And, I mean, you're already killing it and doing things well. So I'm so happy and incredibly proud for you. It's just major.
And please allow me this opportunity to say thank you to you, because you are a very good teacher. And I like the fact that whenever we would have our monthly sessions, you would always say, it's important for me that you understand this. So you would you were taking your time to literally educate me, checking for my understanding, encouraging me to ask questions, because you wanted me to be able to practice a level of financial independence. And thank you for that.
Oh, thank you. Yeah. Thank you. That's awesome. Thank you for sharing that. I really appreciate it. I certainly don't take it lightly, but I love what I do. And I just thank God that, I've been, that people can trust me with their finances. It's such a sacred place, for people to feel some level of comfort to spill the beans, so to speak.
Right. It's
serious business. So, yeah. So thank you guys so much for listening and watching. And I hope that you'll subscribe and like and share and all of that stuff. Until the next episode, be blessed. Take care. Bye-bye.